Well, certainly a lot of excitement related to India's biggest ever IPO, and that is Hyundai IPO, wherein just ahead of the IPO, we have seen great response coming in from the anchor investors. Given the size, the company has raised 8,315 crores from 225 investors, 34.4% allotted to 21 domestic mutual funds. And apart from that, you will see all the marquee names in this big list from the likes of, if we talk about BlackRock, JP Morgan, Government of Singapore, Fidelity, Vanguard, all these names are present, have been participating in Hyundai IPO anchor book. But apart from that, let's also highlight the key strengths and the weaknesses that we are spotting in this particular IPO. In terms of the strengths, as we know, it's the second largest in terms of the passenger vehicle market share, holds around 15% market share versus 40% above of Maruti Suzuki. But in comparison to Maruti Suzuki, it does have better margins because it drives more than 60% of its sales from the SUV segment, which is a high-end product. If we talk about the mix, then definitely they have more than 20% of the revenue coming in from exports, which also drives their margins. But on the flip side, there are some other risks as well. In terms of the biggest risk, it is a pure OFS. No money is coming into the company. It's just the parent Hyundai who is taking an exit. Other than that, in terms of the valuation, there's just 20% discount to Maruti's FY26 PE estimates, wherein given to the Maruti's market share, it is quite reasonable but nothing that lucrative. Other than that, there is a related party transaction because Hyundai parent company also holds a stake in Kia Motors, and Kia also has a good presence in India. So that is something that you should take a note of. And these are some of the risks that we wish to highlight at this price point. But let's also quickly take you through the valuations and the market sizes. This is the kind of a market share that they are still holding. But in terms of the valuations, this is the valuation that is stacking up. And like we highlighted, it's a 20% discount in terms of the market share, in terms of the valuations when we compare it from Maruti Suzuki. But lastly, let's also take you through the recommendations coming in from all of these brokerage houses. Then majorly, all of them have actually gone ahead and maintained their subscribe rating on this particular IPO from the likes of AB Capital, Anand Rathi, ICICI Direct, IDBI Capital, and a lot more. But all in all, there's nothing much to doubt about given the track record of Hyundai IPO, but there are some other key concerns that one should not ignore at this price point.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book-built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.